So guys, thank you for tuning in. Today is 23rd of May 2020, and we are having a live streaming in Zoom, YouTube, and Instagram. So we want to have a look at the markets, have a market recap, and also have a bit of a forecast for the coming week. So you may all know that the purpose of this video is trying to educate ourselves on how we can improve our tradings, and how we can um, take this game to the next level. Um, so yeah, thanks for tuning in, and I hope you're going to enjoy and learn a lot from this process. Okay. So today is going to be an interesting day because, first of all, you're going to ask me questions, and from those questions, I'm going to try to answer them directly through this live streaming, either in Zoom or you're in live YouTube, or you're in what's it called, Instagram. Please ask me any bits of questions. I want to see them. I want to hear them. It's very important to not to know that other people pay attention, and people really do want to take this to the next level. All right. So I'm going to commence with the weekly analysis first of all, and in between, I'm going to mix it up with a recap and a bit of fundamentals. So if you don't understand fundamentals, don't worry. I'm going to simplify this and make sure you understand. Um, so it should be a hard thing, to be honest. All right. So in front of your screen here, you have so your Instagram live. If you don't see the screen here, don't worry. Just go straight to YouTube. Um, Go to our channel. You see the live streaming right now. If you're in Zoom, you can join us in Zoom. If you want the password and ID, we're going to send it to WhatsApp group. You can have a look over there, and yeah. Okay. So it's 7 p.m. right now. I think I'm going to jump in straight to the charts and have a look. All right. So fundamentals. What do we know about fundamentals? So just go to your Bloomberg channel. Sorry, to your Bloomberg website. If you're on an account, great. Just go to Bloomberg. The first thing you're going to see there is stock market headwinds, absolute headwinds, absolute FACO. You don't want to trade stocks right now. They're absolute volatile. No one can make sense of it. But funny enough, future traders are the leading traders at the moment, even far beyond um, in rankings to institution traders. So it's a bit of a headache to be honest, understanding what the market is doing at the moment. You have the Federal Reserve trying to bail out the stock market by buying the stocks, by buying the companies. This is an orthodox. This has never happened before, and this will unravel all new sense sort of economics or finance. I mean, in economics and finance world, we have never seen such a thing. It's like discovering a new virus, and shit, like discovering a new antidote. This is it. I mean, stock market being bailed out by the Federal Reserve. This is crazy, guys. All right. So, all right. So don't trade stock market. That'll be the first headline you're going to see on Bloomberg. If I put it for you here, that should be the case. Yes, my head is about to explode. Virus jargon is calling traders. As I said, this is it. This is what every trader hates at the moment. Next thing we want to look at is commodities. What we have in commodities, fundamentals tells us that. Okay, I can see 4 5 headlines here, but I want to pick on one in specific. I like the oil. Um, Oil is an interesting one. Oil post fourth weekly gain despite doubts over China growth. What that means is that there's still a very negative or bearish stance on oil. So any trader, just be extremely careful on that one. Um, anything might happen. Anything might happen on oil. So next one, I would say China pledges to implement US trade deal, blah blah blah, amid rising tension. That's a good one. That has a huge um, positive influence to the dollar somehow. Others are just going to be extremely interested to trade oil in the coming week. Plus, gold has a long-term fundamentals to it. I think gold is going to go way beyond 3,000 per ounce. You need to pay attention to that one, guys. I'm very optimistic on that one. All right. So next, what we have here? What do we have here? We have. I need to go back. All right. We do have currencies. Hong Kong stocks crash on the new concern over city's future. JP Morgan says US power at risk from central bank digital FX. Traders bet on more pain for Hong Kong with FX falls and ETFs. All right, there's nothing interesting to me based on what I do trade on a daily basis. So I would just like to jump straight to the charts. Now, here are the charts. We're going to start with the DXY. We're still in a bullish bias to DXY, bullish to neutral bias, meaning that anything might happen on the downside, but we just want to see a bullish trend going forward. Hence, if you have a bullish bias to that one, I would like to go and look for any trading setups and opportunities that we're going to find this coming week and might be presenting to us in a sort of way that is inclined to what the DXY is telling us and also what the fundamentals tells us. Um, all right, Euro Japanese yen. Euro Japanese yen. Okay, I'd like to start with USD because this is the main major currency out there. All right, so major currency USD. What has for us? What's in store for us? All right, Euro USD. For some time now, we've been on a very bearish trend. Also, can say it's a downtrend for the USD. Uh, we want to keep on selling this for sure. We just have to be extremely patient and wait for that kissing point. So we have been, like one, two, no, sorry. So first case, second case, third case. Now we're heading for the fourth case. Now this fourth case is a very important one because that's where our entry point is going to be. All right. So if you're on live channel right now, so if you're on live streaming, you should see that fourth kissing points we've been talking about, and it's been trading at around 1.14811. That's an entry point there for the DX for the EURUSD, with a risk reward ratio of 3.98 and a target of 671. So 671 pips, that is huge. A TP wise, the value for that is 107,651. All right, guys, that is our target. So what's our tech? I mean, the also stop loss is we're going to risk a roughly 150 pips on that one with 1.16196. That's a stop loss price. Okay. I just need to log into Instagram via my laptop here and just see what happens. Okay. All right, everything is good on Instagram. Let's go to the next trade. All right. So we're going to look at GBPUSD, the British Pound Sterling, the most precious currency in the world. Well, it's been crumbling lately. Now it's reaching its all-time lows. The all-time lows is roughly 1.19714, and that's just simply because of the Brexit factor and also because of the strength of the dollar. All right, guys. So we want to see that pullback and retest. This is an area, no, not a. Why do I have to confuse these two things? We want to see a retracement, not a pullback. So on that downtrend, we want to see a retracement. That bit of confirmation, that level. Let me just put daily time frame for you guys to have a clear view on that one. All right, so we want the price to get back to that level there. I mean, this what's the name? Oh Jesus, what's the price? Is 1.28208. The, we want to enter that level. That's one point. Am I confusing myself? I'm on the right chart. Yes, I'm on the right chart. So that is an entry point with a risk reward of 2.26. That's one of risk management strategy. 747 pips on that one. What's the pips in terms of stops is 330 pips on GBPSD. So there you have it, guys. Same trend, just like USD, very sharp triangle on at the end. Other might call it a pennant, but pennant is mostly on a small time frame. But it's a pure wedge. Not It's not a wedge, but it's clearly a triangle. Wedge is open at the end, so I just consider this as a triangle. So on a time frame, that weekly time frame, you can clearly see the overall downtrend on GBPUSD. All right, next trade is Euro Japanese yen. Euro Japanese yen. All right, what do we have? Same downtrend, very sharp, like a knife structure to it. All we want to see on that one is a further sell off to the downside because there's so plenty of room to the downside. We just have this temporal support line. So on a bigger time frame, what we want to see is that kind of all the way to 95.739 support level. We just have to wait for that breakout to the downside. Plus, when you have an interesting like up and down trend that is heading south, that presents us with a lot of opportunities. Um, oh, All right. Is it a question or what? Lower hand. What's this? If you have any question on Zoom, please ask. Oh, okay. There's a question here. All right. Kako kutoyo log kwenye setting ya watu wa join. Okay. Just give me a moment, guys. I need to do hide disable participation annotation. What lock? I'm not lock. Yoyote. Settings. Oh, guys, sorry, there's been a bit of pausing there. I think I have to fix something on Zoom. That people waiting. So, yeah, it's such a shitty um situation. Let me update. Man, I don't know what's happening on Zoom right now. It's absolutely fuck all. Um, Guys, I just have to proceed, man. Anyone in Zoom? Guys, I have to go on, guys. I have to go on. I've been on pause for such a while. It's not fair for everyone out there who's been trying to pay attention and following us. All right, for the benefits of many who are out there, let's crack on with Euro Japanese yen. Now, Euro Japanese yen, Euro versus Japan yen. All right, so what we have fundamentally, the Euro is extremely weak. Um, that's no brainer. Japanese yen is moderately strong at the moment with the current uncertainty in the market. Do you remember Japanese yen is a safe haven, so it's such a good asset to be trading at the moment. Now, being a massive seller for some time, I do still hold that bearish stance on Euro Japanese yen. I want to see the price coming here with the risk reward ratio of 3.66. Entry point, write it down, 118.426. That is our entry point for Euro Japanese yen. With the target 400 pips, we're looking at 114.469. That's the target profit. There you go, guys. That's the trade Euro Japanese yen. Okay. Nenda settings, Nenda participants. Okay. So Zoom meeting is out. We're updating the software right now. I think that's the main reason why we're having these obliterating issues. Okay. So Zoom meeting is out. We're updating the software right now. I think that's the. So Euro Japanese yen, we just talked about that. Let's jump to USD card, USD card, USA, USA, USA. Okay. USA, USA, USA. So USD card, what do we have for USD card? So you have two potential trades. I think that all of them fundamentally are viable. We have an appreciating oil. Remember, Canadian economy depends on oil. So anything happens to Canadian dollar has a positive correlation to oil. So henceforth, we want to see if there's an appreciation on oil, we want to see also appreciation in Canadian dollar. Right now, we're trading on consolidation. So there's a push and pull. The currency pair is not equilibrium. And that's why we're not having trends. So there's a push and pull. There's a balance between both of the currencies. And that creates a no trend. It creates this kind of consolidation zone. So what you have to do there, just do not trade anything. Just have to be patient and wait for any sort of a breakout, either on the upside or to the downside. If it happens to the downside, that will be even great because you have a huge gap here to be filled in terms of price, and this area has a risk reward ratio of 4.96. That area itself gives you roughly 800 pips. So trading USD card for me coming week is something I need to pay an attention to because it's an interesting level. We're reaching interesting levels and anything might happen anytime soon. Yeah, so USD card, the trade of the week for the coming week. Otherwise, if there's any bullish coming up, meaning that oil is going to be weak, dollar is going to do what's doing right now, meaning it's being bullish. We might expect to see a breakout on the upside, and that will be a good thing to see and enter in terms of buying the USD card. All right. So we talked about Euro JPY, Euro USD, USD card, and GBP USD. All right. Let's talk about okay. What's the next trade here? All right, for me, I like to pick very high dependable, high probable trades because my strategy is a 70% strategy probability in terms of returns. I like to see setups, and those setups tend to take a while. And I find myself in a week I can trade three times, two times. I mean, take 2 to 3 times, 2 to 3 trades in a week, and I think that's an ideal number if you speak about being professional, because trading is about protecting the downside. It's not about profits all the time. It's about the downside. All right, guys. Having said that, I would like to jump to stock. Now, stock. I always say that stock. We don't want to trade stock at the moment because there's a lot of uncertainty. The market is not conducive. I mean, as investors, traders, these times are the hardest times to be a trader because of that volatility. So I just jump out and I won't trade stock at the moment. All right, all right, all right. Okay, let's look now. Now we're starting to round up. We want to go to commodities. Now, I know most of you are not commodity trader because introduction you had on Forex on F it was purely Forex. And we call ourselves Bongo Forex for a reason that it's simple for marketing. But what we do here, we trade all type of instruments which are highly liquid. Commodities, stocks, and FX in category of derivatives. We don't do options or futures. So as a trader here going forward, we want to teach you on how to trade commodities. So I think today late night, we're going to have a separate commodity video on YouTube. and you should be there and watch it. I think it's going to help you in terms of learning how to trade commodities. Okay. Okay. Palladium. Anyone knows what palladium is? Palladium is a material used to create. No. Should I say create? No, it's a material used in building electric cars. It's one of those of the future thing, like the thing for the future. So there's high appreciation in value for some time now. If you look at it, since 2005 to 2015, we've been discussing on buying palladium. You just have to be bullish and bullish on palladium. And for me, I think palladium still has a potential to the upside. However, recently we've had a bit of a downtrend, and I would call it just for me on a large or long time on large time frame. Sorry, this just simply a retracement. It's not a reversal. And right now, what I see on the chart here is the price just broken through that downtrend. Now that breakout with a pullback and retest, that's a very good, very very good opportunity for us to buy on Palladium and ride it up to the upside. Um, so we're going to wait and see any sort of bullish trend and patterns going forward for Palladium. And yeah, so up to you guys. Next trade is gold. Gold is simple. 3,000. I bet you guys 3,000. That's the next high for gold, all time high. And Goldman Sachs said, JP Morgan says it. I have no, I'm nobody to argue on that one. I'm not. Oh, okay. I think I speak too fast. I need to chill out. So I'm nobody to dispute that one, to be honest, guys. I'm nobody to dispute that one. I see gold going to 3,000, and all I want to see is a bullish trend with a bit of a pattern to it, a beautiful patterns that we like to trade. At the moment, we don't see those patterns. We just see a lot of a breakout, retest, and then continuation, breakout, retest, continuation. We can still trade that one. But if you have that smooth uptrend with that zigzag, a low kissing point, it has high probability and high dependability on that trade to take. So I think gold is an interesting one, but pattern wise, it's not that good. But in terms of breakout momentum, is very good, and I think you need to look at it. Oil. So oil, okay, this is highly debatable. I think there's so many dumb traders out there that are trying to buy oil. I'll tell you guys, don't trade the dips. Avoid trading the dip, guys. I don't know why you're so compelled to that kind of trading style. It's very, very dangerous. It's very toxic, and just avoid it, guys. I mean, why you have to trade the dips? Follow the trend and just follow it. That's all you have to do. So don't buy oil, whatever the case. Don't buy oil. You're gonna ban your account. You don't want to ban your account. Um, Especially these times when everyone is absolutely broke and bankrupt. So cash is king right now, and protect your cash at any cost. So how I'm going to trade oil, I'm still bearish on oil. I want to short it. So here on the chart, we have a daily time frame. We're reaching that resistance line. I do expect the price to show a bit of weakness, but I won't enter straight up to it. I want to see the price break through that tiny mini support neckline. That will be my trigger confirmation, and I just want to enter that point, and that will be my sell on oil. Otherwise, my expected breakout, we call them fake breakout in terms of what the fundamentals is in line to that particular asset. Right now, I'm gonna see a breakout to the upside for oil, and don't buy it, don't go into it, guys. I still emphasize on that one. Don't go on WTI in terms of buying it. Just be patient, look for any bearish or sort of selling opportunities going forward, guys. All right, lastly, we are looking at Bitcoin. Everyone talks about Bitcoin. I thought it'd be very important to bring it to you guys. Bitcoin. All right, what do we have with Bitcoin right now? Bitcoin are super interesting. Right, Bitcoin. This is the kind of pattern I want to see in any trending market. So that zigzag I like here is very good in terms of having to enter price at a discount, and Bitcoin is giving us all. Say so right now, buying Bitcoin will be at this point here. Risk reward ratio of 2.2. Our entry price is 8,416.18. That will be our shooting range. Take profit 1,000. Sorry, it's 10,000. Stop loss is 7,793. So that's it for Bitcoin. Very simple one. The setup is very interesting. On a shorter time frame, you can see there's a bit of consolidation, like in a consolidation zone. That might be the case, but I just want to see that breakout to the upside, that momentum to the upside. That's my take on Bitcoin. So the floor is open for any questions. Uh, Send me questions on any streaming you are right now. Platform, Instagram and YouTube. Please just ask me a question before I go knock myself out. Today is Saturday. I just want to go and sleep. Oh, so exhausted. All right, the floor is open to you guys. Okay, guys. I'm so sorry. I just realized my phone camera was a bit tilt and you couldn't see me properly. All right. So, what is G? So about GJ next. GJ. What's GJ? GJ. What's GJ? I clearly don't understand that question. I am the dealer. Please elaborate more. Um, what's GJ? Shit, my camera was just tilt. I couldn't give a proper live stream. So sorry, guys. I'm so sorry. Oh, Jesus Christ. That was a terrible session. Oh my days. All right. What's GJ? Please tell me. What is GJ? What's GJ? What's GJ? All right, guys. Man, I think I need to go and have a rest. We need to call it off today. It's been wonderful. It's been wonderful. I'm so sorry for Instagrammers. This is so unfair to you guys. I mean, the camera shit. I don't know what's happening. Yeah, try to put it properly. It just tilts. I didn't know. I was just focused on the screen. If you missed this trading weekly analysis review, just go to our YouTube and you're going to have it live recorded there. And yeah, Oh, GBP, JPY, that's what you meant. I had a feeling that's what your question was, but I'm just tired, man. Just try to run away. All right, GBP, JPY, GBP, JPY. All right, okay. Live here on my screen, what I see. Uh, okay. Hmm. Fundamentally, it's an easy trade. First of all, weak GBP, strong Japanese yen, perfect equilibrium. That's the trade you're looking for fundamentally. Technically, is it the same? Is it a true story we're having on the technical wise? If you look at the technicals here, we just um, came off, and this is one of the trades I was talking about a couple weeks ago, and I hope if you guys just you can see there, even there's a line there. You see this line here. This was the previous neckline I put here. On an intraday, this is the kind of trade you want to take. You just for 4 hours, you're in and out, take a profit and out. So this was the trade I was talking about a couple weeks, like 2 or 3 weeks ago. This neckline here, and that has happened. And we want to see a further sellout on the GBP JPY. There's a clear indication of a tiny trend line to the downside showing us. Maybe I should, change the screen for you to see, Mr. I am the dealer. All right. So here's the screen, right? So this is a 4 hours chart. And all right, let's go to daily time frame first of all. So see here, we had this line here. This line acted as a resistance support line at the same time. Price broke through, and now it breaks back again, and then pull back, a retest, and then a bit of weakness there. My entry point was at this neckline here. I drove it all the way to the down. I haven't reached to my target profit yet on that trade, but I'm still expecting a further sell-off on that trade. This is a sell-off I'm expecting. Now, for instance, I'm right. The trend has not formed yet, clearly. But the moving average is telling me this market is a trendy market. And we see this structure. You had the first case, second case. I have to wait for the third case, right? Pull back, that retest. This third case here is a very important one because that will be my confirmation to enter that trade. Otherwise, you just have to pay attention to GBP, JPY, and be extremely patient. All right, I'm the dealer. So yeah. So others guys, thank you so much. I caught you guys off guard on this live streaming today. It was just a 30 minutes reminder to you guys. I should have done it like a day or a week before in terms of alerting you. Otherwise, this is the good thing about Instagram and other social media platforms. Everything's recorded, everything is stored, so you can go back there and review. And thank you guys, and please, please, please subscribe to our channels or in social media platforms. What is B? All right, so guys, cheers and thank you.